Welcome everybody back to our webinar series, Learn to Trade the Market. Yeah, with Stefan Friedrichowski, that's my name, and thanks to Argus FX, who made that webinar series possible for all of us. Yeah, today is the 21st of March 2017. So that's for the recording that we later know exactly the date of that webinar. As always, I have to mention the risk warning because we talk about trading strategies, trading setups, and of course you know that whenever you trade, you do it by your own, on your own risk. But I think that is something you know, and for sure I know that you know. Okay, there was already a question about my display here or what I transmit to you. That was something like this one here, and there was already a question, hey, is that an expert advisor, a robot strategy? Yes, indeed it is. So that is something I developed together with Peter Müller. So that is a certain strategy which is traded quite actively. As you might already see, that there are lots of trades open, and the colors here, the red and green lines, they indicate trades which have been finished. And of course, green means a profitable trade and red means a non-profitable trade. And yeah, that is something we develop for wealth strategies, but that is not the topic for today. But it's always a nice display here, or to have that before we start with the webinar. Okay, but now back to the webinar. Of course, we want to recap what we introduced last week, look to our trading account. That's something we do as usual. Then finally, I want to go once again through the nomenclature for our different trading setups, because that is a little bit of an introduction to the then following trading praxis. But today it's not only the trading praxis itself, it should be a little bit more like a guide how to deal with our, in total, 3 direct trading setups and 2 additional trading, it's not really a trading setup, but that trend trading and range trading is something we can use for additional trading activities. But so we have in total 5 different setups. We use sometimes different time frames. So what I would like to do is to give you, before we really start trading, to give you an additional introduction how I personally, let's call it, manage that kind of different trading setups, what is the one I start with, and so on and so forth. But first, as always, let's have a look to our trading account here. No, not this one. Now we go once again the wrong side. So we go here, and yeah, looking to our last trading activities, they have been not profitable during the last week. As you can see here in the account history, we have 3 trades which have reached the stop loss during the week. But anyhow, we have still 1 running trade, so 1 open trade, and that is a long trade on euro Japanese yen. The trade is, at least as we speak, in the profit, and our total account right now is yeah, close where we have started. I made already several times the remark that to really judge our trading setups, that's too early, because we don't have enough statistics, we don't have enough trades. But let me announce that already for next week. We do a little bit statistics with trading and trading equity curves and results of trading activities, so that we can better have a feeling for when is a time to say yes, it works, and when is a time to say no, our setups do not work. So, but in total, that's the other announcement. Next week will be the last one for that kind of series, but there will be other activities coming soon. But anyhow, I have to apologize that you have to re-register into that webinar here because I simply forgot to prolong to add the additional sessions for the webinar. So please apologize that you have to re-register. But I see everything works. You are here back again. Good. So that's for the last trading activities. Now back to our slides here. And by the way, the slides are already uploaded, so you know how to find them and how to download them. So then you have additionally all the links, especially to the YouTube channel, where you can find all the recordings of previous webinars. So here we have our 5 total setups. The first and second are more for so-called discretionary trading activities, meaning looking to a chart and then say, that is a good hint, I go for this and that trade. That is trend trading in the 2 categories, into the direction of trend and the counter trend. And the other one is range trading. Whenever you see a long-lasting range within your charts, then it's time to say, hey, do I want to see a breakout, or do I see a chance that this range will stay a little bit more, so that the price will stay within the range, which means if you are at the upper limit of that range, it might be a good idea to open a short trade so that the price can go to the other side of that specific range. Finally, we have introduced 3 real trading setups based on multiple EMA. That was the first one. That is a follow trend setup, and we have given the name multiple EMA for that. And why do I always emphasize those names? Because I want to have those names within my comments for every trade within MT4, so that I can later see, hey, which trade belongs to what kind of setup, and so it enables or prepares us for later investigations of the trading account. So the other one was weekly breakout. There, for that trading setup, we looked for the weekly range from last week, and we have an additional filter so that we normally only place one order to one side of that trading setup. So that's the breakout W1, and that's the command line for that trade. And finally, last week we introduced the so-called lead leg strategy, which looks for 6 forex pairs, always starting with euro, Canadian dollar, euro, Australian dollar, and so on and so forth. And by analyzing those 6 charts or those 6 symbols, we know everything about in total 21 forex pairs, and we can look for the best opportunity, or what we filter by that activity. We look for finally that symbol with the strongest trend at all. So that was we introduced last week, and you know that for our stop loss setting we use 3 different suffixes. So a trade might start with breakout W1 and then the name goes further with underscore ATR, underscore chart, or underscore fixed, in order to indicate how did we derive the stop loss for that trade, by ATR, by chart, or simply by a fixed rule. So that is the overview for our trading setups. But now let's go on really how to start, because it's getting more and more complex. We have prepared our MT4 with different kind of profiles. Every profile is more or less directly linked to one specific trading setup. But now the question is, hey, I start my MT4, I start my computer, and I look to the charts and how to really start. So what is the sequence I always do when I want to look for after our different trading setups? What is the kind of sequence I personally apply in order to come with my personal selection of trading activities, either market trades or pending trades with, for example, buy limit or whatever. So what for two comments before I really start. So one comment is simply that I avoid multiple trades on a single symbol. So, for example, we may open a trade for Euro Japanese yen based on multiple EMA, and then later we look for lead leg, and finally we come to the conclusion, hey, based on lead leg, it's a good idea to have a trade on Euro Japanese yen as well. In most cases, I don't open two trades on one single symbol, but there's an exception. And the exception is simply if the potential or the final the stop loss and take profits for those two trades are really completely different. Sometimes this is related to different time frames, for example, but finally you can see it simply by looking for the stop loss and take profit values. And just think about, you have a long-lasting trade on Euro Japanese yen, and the trade might run for weeks. Then, of course, on a shorter time frame with much more tight stop loss and take profits, you might even open a trade into the opposite direction. So that is still okay, but at least there's sometimes a question mark behind that, but in principle you can go for that. But more generally speaking, I avoid multiple trades on a single symbol. The other thing is that we learned that there are trades which cost money every night, so-called swap prices or swap costs, but you learned that there are symbols with positive swap values. That means opening that trade gives a little bit money overnight, and that is so-called positive swap values. So whenever you have a lot of trading opportunities, then I would always select those with positive swap values, especially if those trades are meant to run a longer time. So formally speaking, if the take profit is more far away, then it's a good idea to look to the swap values of that underlying and the desired direction, either long or short. So, but that is not a must. It depends a little bit on how long the trade should run, at least from the point of opening. In general, what I do is the following sequence in order to go through our different kind of setups. I always start with the weekly breakout W1 and place those orders according to that specific setup. So that is a starting point. Those trades are normally running a longer time. If they don't hit the stop loss on a short period, then they might run really maybe a week, 2 or 3 weeks. So therefore, those come first, at least when I go through the list of setups. The second is the multiple EMA setup, and I start with the time frame D1, so daily based, and then I switch to a little bit shorter time scale, and that is H4, so 4 hours candles. Finally, I go to the lead leg strategy, and once again I start with the daily, and then I look for H4 as well. So that is my sequence going through those setups, and finally if there's still time, then I go to just the charts, look for example for trend trading or that range trading, those additional setups we have within our basket of setups. Some more general remarks, because I know what sometimes happens if people, especially beginners, are sitting in front of the MT4 and looking for the trades, that sometimes they feel, and I simply call it here panic, that they don't find a good trading opportunity. And finally, that forces people to open trades. And you can already interpret my voice. That I think is not a good idea. If there's no good trading opportunity, okay, let's revisit the MT4 charts next day. No problem. So there are always opportunities, maybe not now, but maybe tomorrow. And then I simply have to wait for that tomorrow. So therefore, don't panic if you don't find a trade or trade opportunity. The next remark, and you see that I follow that by 100%, that I don't change stop loss and take profit values for running trades. So for ongoing trades, and by the way, for pending trades as well, I would not change a stop loss or take profit. Simple reason, there was a reason to open that trade to that specific time with exactly those values of volume, stop loss, and take profit. So why now change? You might say, okay, there's now a new situation within the chart, but if you run into that line of arguments, then that would finally mean you might rethink your trades every millisecond. I know I exaggerate now a little bit, but of course the market changes and the market situation changes all the time. But if you always would follow those changes by adjusting, for example, stop loss and take profit, finally it would mean we have to do that kind of job every minute or finally every millisecond. And that is something I don't want, and therefore I simply don't change anything about stop loss and take profit. Yeah, and my last line, it's really, and honestly speaking, that is the most important line at all. And I repeat my wording here 6 times, and I could go on with that even further. But yeah, this discipline is the one thing which disturbs all our private trading activities by far the most, and that is that we don't apply our rules, that we change our rules as we speak, that we use different rules today compared to tomorrow, compared to yesterday. So really to be disciplined on trading activities is something which is really extremely important. But now, of course, we want to practice a little bit more with those setups, and I will simply follow the sequence as mentioned here, starting with weekly breakout and so on and so forth. Maybe I will skip some trades if we found them, because I want at least go during the last 40 minutes througthrough all 3 trading setups. So maybe I only I will place at least 1 trade if possible within every setup. But if there are more, maybe we skip them and I only will mention those trades. So before we come to that, of course, we start, as mentioned, with our weekly profile. And I want to go to the weekly profile first, and that is this one here, just in order to get those trades for the weekly breakout. And you might remember what's always important is that we have an EMA within every chart. Sometimes you might not see the EMA simply because it's out of scale, because I have zoomed quite a lot. So S&P 500, left upper corner, yeah, only a trade to the long direction is possible according to the setup, and you see what are the relevant parameters. Of course, we look for the previous candle, that is this one, and we always look for the high and the low, and those 2 values enter in our trading setup. As in most cases, the principal kind of trade, or the trade of S&P 500 and the trade in the DAX are quite similar, so same story, only to the north would be possible. And just to have a short view here, so it would be a long trade here in S&P 500, long trade DAX, the short trade for gold, a long trade for Brent, Euro, US dollar, I think it's up to the north, yes. So it would be a short trade in Euro, US dollar, a long trade US dollar, Japanese yen. In principle, a long trade, am I right? No, a short trade in Euro, Japanese yen, according once again to that setup. But here we have already a running trade, so I will not trade this one. And finally, British pound against US dollar. Let me see where we can find, that's on the north side, we find the EMA. That means we would open a short trade. So running through that list, you see in most cases, we are really far away from a potential entry. For just an example, US dollar, Japanese yen, long trade, but here on the other side, so really far away. Short trade, British pound, US dollar, really far away. So what I now do is simply I filter just by eye those which have really a chance. In principle, every trade has a chance, but looking to the distances, for example, here, Euro, US dollar, it would be a short trade. So it's really far away right now. So if I place an order or not, that short order on the at the low as an entry point with a low of the previous W1 candle, so it's really far away. So where do we have a real chance? So a real chance we would have here, S&P 500 as well as DAX. Both trades would be long trades on the upper side. Even that is a little bit away, so we don't have to hurry here, but that's the one we can place in order, because all the other are really far away. So let me look which one I decide, and today I simply go for the DAX values. So what did we need here? So I click on the previous W1 candle, and then I can find those numbers here in the bottom line of MT4, and I write down the numbers for the high, which is 12,176.89, and the low is at 11,928.46. So, you know, we want to place a long trade in this case because we are far above the EMA, and with those two numbers we go in our standard Excel sheet, and that is the other one here. So we can first write down the numbers for high and low, and the other one is 11,928.46. So we want to open a long trade, which will be a buy stop order at the high of the previous W1 candle, and the stop loss for the trade is 12,094.90. So that's the stop loss. So it's this number because that's a long trade, and with all those numbers we can calculate our lot size. And as always, we start with a contract size for DAX trade. This is 1. Then we need the right currency. The DAX is already in euro, so the let's call it exchange rate is in this case 1, and our entry should be the high of the previous W1 candle, so it's this number. Stop loss has already been calculated, and I will simply repeat, it's 1/3 of the total range of the previous W1 candle, and so that's the stop loss, and with a risk of 50 euros, this calculates down to 0.6 lot. Okay, now we have a problem. And what's the problem? Because we can only trade complete lots. So in this case, so we can either don't open the trade, or we would place an order with 1 lot, but then the final risk will be a little bit higher. So that's now the question for us, what to do. And since I don't want to have a higher risk, so I will not go for that trade here, but we can check very fast the S&P 500. Maybe for those it will work. 2391 is the high, the low is 2357.2, and we can use those numbers, and exchange rate is 1.08. So let me be a little bit faster here, entering those numbers, and now stop loss is at the level of 2379.84, and with those numbers I calculate the risk and the lot size. So we need the exchange rate because now we trade S&P 500, which is US dollar based. Our entry should be 2398, stop loss 2357.2, and now you see that we have calculated a lot size of 1.6, which is okay, because then we can trade 1, and so that's okay. But what we do is we change the risk-reward ratio to 5. We really need a little bit more here. So take profit would be for that long trade 2560. So that's what we use now for the trading, and we can place the order. So it's a new order, and what we want to trade is here one lot, because we cannot place any digits here. It's not market. It's a pending order, and the kind of that pending order is a buy stop order. And we use the expire date here as well, because you know, on Friday I want that trade or that pending trade being deleted automatically, and I can use the expire functionality in order to have that. So the comment of the trade is weekly. No, I have to look. Sorry, don't make a mistake here. Let's have a look. So it's breakout W1. So now we have it. It's breakout W1, and stop loss in this case is fixed because we use a fixed rule for calculating the stop loss. So it's a buy stop order at the level of 2391, which is the upper limit of the previous W1 candle, and the stop loss of the trade is at 2379.84, and the take profit of the trade is 2560. Checking volume first, looks good. It's a pending order, so it's not that dangerous to directly place it. Now we can visually control it a little bit, so that 1/3 looks good. So we can look for the stop loss, and now I'm a little bit confused because the stop loss is only 10 euros. So what's going wrong here? Maybe I have not entered the right number. Let me check. So it looks good. Now I see my point. I hope you see it as well. It's good to make mistakes here as well, because I have entered the wrong stop loss. So what did I use here? I used as being the stop loss the lower end in the calculation, and the lower end of the previous W1 candle is wrong. The stop loss calculated on that 1/3 calculation is this one here, and now you see we can trade four lots. Okay, so that was a mistake, but you see, mistakes belong to that business here as well. So what will I do? I simply delete that order and reopen the same order, but now with 4 lots. So hopefully I do everything right, and unfortunately it always takes a little bit of time here because my internet line is already quite busy with the transmission here of the webinar. But anyhow, it will work. So be patient. We will get the order up and running here as we speak. So it's a buy stop order. It gets an expire date on Friday. and I use around 6 o'clock. And now the comment is breakout W1 breakout W1 underscore fixed, because we use a fixed stop loss setting. And now going for the numbers, entry price is 239891. Stop loss is 2379.84. And finally, take profit 2560. Now it looks good. Okay, place the order. And relationship between entry and stop loss looks good. Checking once again the stop loss value, which is in this case 41 euros, and that's nice. So that's exactly what we want. As always, for W1 orders, take profit is a little bit more far away, but now we have it here, so that looks good. Oh, thank you for the remark. There was somebody already telling it me that since we use a different stop loss, of course we get a new take profit, which is 24468. So second mistake within one webinar, but I don't have to place the complete order. And I was wondering, by the way, because visually the distance was quite far away. But I can simply double click here and enter a new take profit for the trade, and that is 2446.8. So I hope two mistakes in one webinar are enough. So now it should work. Okay, so now it looks better with the distances and everything. Good. So that was the breakout trade, and as I mentioned, you will see there are not many chances for that kind of scenario because, for example, Brent. Brent is one which maybe is something one could place an order. Look, it's not that far away that we have the high of the previous W1 candle, so order would be placed here. So that is in reach, but for all the others here, it's very unlikely that those orders we might place would be triggered, would be filled during the rest of the week. So Brent, keep in mind, is another opportunity. So now, as I mentioned, I switch to the multiple EMA setup. So I go to a different profile, and the profile of choice here is now overview W1, not W1, D1. And now the charts are opened. And the good thing is, since our profiles are that good, we can see our opportunities quite fast. So we need a constriction of our 4 EMAs in order to give us a signal for opening a trade. And as you can see, S&P 500, no chance. DAX, no chance. Gold, okay, we see a constriction. We look for the slope of the slowest EMA. This goes still slightly south. So here is a short opportunity. Let me first go through all the charts. So constriction in Brent is already, let's call it in preparation, but it could be a little bit more. We have Euro, US dollar, too far away, the EMAs. constriction in preparation, US dollar, Japanese yen. Okay. Same for Euro, Japanese yen, but there's already a long trade running, and this would be a second long trade. And finally, British pound, US dollar, just in preparation, but not already there. So not the best chance. So there is a chance exactly here. So at gold is now the choice for the next trade, and we would open a short trade, and that short trade could be opened market. So we need a price for the risk calculation. Price right now 1238, going upwards as we speak. Stop loss, we can use a chart here, and we have two possibilities for the stop loss. One possibility, of course, would be that high here, at that position, and a little bit more far away, another stop loss around here. So I go with my stop loss in between. So I want to place my stop loss between those two values. So here would be a nice line for that. So that is the entry stop loss 125, and I go for the next number 1251, so a little bit higher. So that would be a good kind of trade. So now we can calculate the trade. So contract size for gold is 100. We have already the right exchange rate here. Entry price, we would go market, so 1238. Stop loss 1251. And you see we get a risk, or we get a lot size of 0.04 with a risk value of 50 euros. So now for this kind of setup, we don't need a risk reward ratio of 5. We go down to 3, and that would mean we have a take profit. We have a take profit of 1199. Okay, that's all we need for the next trade. So we can open that trade market. So trading new order, but of course not for a lot. We go for 0.04 lot. We go market, yes, and it's a multiple EMA trade, and the stop loss was taken out of the chart, and therefore suffix chart. And the stop loss for the trade is 1251, and take profit is 1199. So since it's a market order, we have to better look that everything is all right. Looks good. It will be a short trade. Okay. Sell by market. So now order is running, or trade is running, and you see stop loss looks right. It's close to my red line. Value is right, close to 50 euros, and take profit we have not checked before, but that would really look good just by looking to the chart. At the moment, this kind of trade is a little bit of a counter trade, because of course everybody sees that upwards movement during the last 4 or 5 days. So looking for that short-term movement within the last 5 days, we now assume exactly the opposite, so that it should go down once again. So it's a little bit of counter trend if we go here. Good. So that's for the multiple EMA based on the time frame D1. Just only have a short look to the other time frame which is this one here, H4, and that we have a look here, and just I want only to comment on what is possible here. So DAX, of course, no constriction. A little bit better it looks here for S&P 500, but oh no, sorry, the slowest EMA is just coming here, so it's no constriction. Back to gold. Looking from that time frame, it could already be a long trade, but now we have a trade based on time frame D1. That's okay. Brent constriction in preparation. Euro, US dollar, no constriction. US dollar, Japanese yen already completely on the other side, so it has turned around. Euro Japanese yen looks not that bad for a long trade, but we have already a long trade. So therefore I don't want to have another one here. And yeah, British pound, US dollar, strange situation, is turning around as we speak, so no trading setup here. So therefore we are through with the setup, and now we go for a new profile I have prepared, but you will see it looks exactly the same than the previous one for lead leg. So the difference compared to the profile of last week is simply that I have changed the time frame to D1, and you might remember that we have introduced that blue box or the blue rectangle here, and the function of that blue rectangle is that we can scale all the 6 charts in the same way. Why? Those 6 each of those boxes has a fixed percentage height. In this case, by the way, it's 2%. For all within every chart. And since I now know that such a blue box has a height of 2%, you can immediately see by your eye that Euro Swiss franc is completely scaled different. So because the box is that huge here, I have to rescale the chart so that it would represent a 2% in the same height. So remember why I do that, because finally what I have to do within that setup here is to find the one with the highest slope, so the leading symbol, and the lagging symbol, which would be the one with a highly negative slope. So all the other charts have about the right scaling. Maybe everything should be a little bit downscaled, because the smallest one looks like here, Euro British pound, but we can live with the scale as it is right now. So now the question is, what is the one with the highest slope? So which one is the leading? So candidate would be Euro Canadian dollar, a little bit Euro British pound, and Euro US dollar. So now it's up to us to decide for one. Honestly speaking, they really look quite similar. All the 3 charts, all those 3 Euro and then Canadian dollar, British pound, and US dollar, they really look quite similar. So there's no really good preference. I personally go for Canadian dollar, being here my selection for with the leading, as being the leading symbol. And now the question is, which one is the one with the slowest, or not slowest, the steepest going down slope, and in this case it would be either Euro Australian dollar or Euro Japanese yen, and just only looking to the slope of the EMA, but looking to the overall chart behavior, then Euro Australian dollar would be the best one. That means if we want to trade that symbol with the highest trend or the most trending behavior, it would be Australian dollar against Canadian dollar, because this one has the highest slope up and this one has the highest, or better mathematically, the lowest slope downwards. So it would be Australian dollar against Canadian dollar. So we need a new symbol here. And that symbol is within the list of minus. So it's Australian dollar, Canadian dollar. And now we open a chart with that symbol in order to simply have a look what might be a good trading opportunity here. I go for D1 as well. And let me make the chart a little bit bigger. And you can see already that we have very good slope upwards here right now during the last 3 months now. Okay, looking to the chart, we would say here is something like a resistance line in that range, but it's the one with the highest slope here. So looking to the chart and having in mind that especially today we have already a very good correction phase. So you see that, let me zoom here, that red candle right now, the today's candle. So we have already a little bit of a correction. Therefore, it's a good idea already to open that trade market. So therefore, what numbers do we need? We need the price. The price is 1.0274, and we need the exchange rate Euro Canadian dollar, because the second name of that symbol is Canadian dollar. So Euro Canadian dollar is at 1.43. Good. And now we need a stop loss for that trade. So we have, I think we have two good opportunities. One would be here in that range, or if you want to be even more on the safe side, or then it would be down here. So let me first start with that line, because we want to open a long trade. And now the question is, what kind of swap rates do we have for that trade? Because if I want to have a more broad, or the stop loss more far away, then the take profit will be more far away as well. So it would be a long-lasting trade, and therefore it's a little bit a question of swaps as well. So therefore, let me check the swaps, because I don't have all the values in my head, but we can look here. So a long trade has positive swap values, which is good. So then we can think about a long-lasting trade here, and that means let's look whether we can get even a trade with that kind of stop loss. The question mark here is simply the lot size, but we can calculate. So stop loss would be 10122, and let me check the calculation. So contract size for Forex is always 100,000. Exchange rate to Euro Canadian dollar is 1.43. The entry for the trade Australian dollar Canadian dollar is 1.0274 because it would be a market order, and stop loss 10122. Okay, even with that stop loss, we can trade 0.04 lots, which is nice. Risk reward ratio 3 is good. So take profit would be 1073. Good. Sounds like a trade. So we can place an order as well. So trading here, a new order. Lot size is already right. The comment for that trade is lead lag. And we use a time frame as an indicator in the command line as well. And stop loss was out of the chart. So, but yeah, market execution is right. But the trade needs a stop loss, and the stop loss of the trade is 1.0122. And take profit is now really quite far away, 1.073. But we know we have the swap on our side, so that's good. So if the trade needs longer time, it doesn't hurt us because we have positive swap costs. So it's a long trade and we can order. Good. Let me check stop loss value. Yeah, it's 44 euros. So calculation was right. And let me check here a little bit. Take profit. Yeah. It would really take maybe 2 months to reach that take profit. But anyhow, the trade can run. So I can close the chart here. Looking for one time frame, here in this case for lead lag daily, then everything is done. There's no second trade out of that kind of strategy. But what we can do is we can change time frame, and that is at least visually want to do it here. So I go to my profiles and go for lead lag H4. And let's first check the blue boxes. Yeah, same story here. So Euro Swiss franc is so to say zoomed. And we have to rescale a little bit. Now all the other boxes, they are now quite okay, more or less same size visually, which means that all the charts are now really same scaled, and that's what I want to do here. But now we have to ask, what is the strongest? The strongest, so the leading, it would be clearly Euro US dollar. And do we have with the negative sign? Yes, we have. That is Euro British pound. So the trade of choice would be British pound against US dollar. Let me open a chart for that symbol as well. And we have already H4 as the time frame. And you can see already that extremely big candle of today. So how would I trade now? This one here, because there's not enough time to do that. In this case, I would not open a market order. So in this case, I would place a buy limit order around here. Half of that previous H4 candle And first I want to get the price a little bit down, filling my buy limit order, and then going up as well. So that would be a second trade on the trading setup lead leg, but now on time frame H4. So we have a couple of trades placed, well, not that much. So we have two running new trades, that is gold and Australian dollar, Canadian dollar. We have one pending order here on S&P 500. Okay, and we spoke about 2 or 3 additional trades which I did not have placed simply because of time. So at least 2. The one is this one here, British pound US dollar, and the other one would be Breakout W1 candle, and that is a trade on Brent into the long direction. So that's missing, but only because of time. So that's for now. Next week we go a little bit further. So just look into the trades, maybe some trading practice as well. But what we will do as well is I want to prepare you a little bit about statistics in order to come to the point judging your own trading account. How does it look? Is right now, as we speak, minus not still within the range of what might be possible? And to answer those kind of questions, we do a little bit statistics within our final webinar next week on Tuesday. Hope that everybody is still there once again. And for now, have a good day, have a good week, and see you next week. Thanks. Bye-bye.